Broadcast is now starting. All attendees are in listen-only mode.
All right, welcome everybody. Thanks for joining us, and we're going to get started right on time this morning. Hopefully everyone can see me okay on the webcam there. I'll be turning that off a little bit later, but do like to introduce myself with the webcam on. So good to see all of you, and it looks like we have a good crowd, and I still see, well, there's people joining here already. Let me get a few people here. Let me clear this screen here, and then we'll get started. Okay, very good. I think we're ready to go. So we're going to talk about a new way to simplify your options trading with proprietary automation, and this does not require babysitting your trades and your screen all day. We have curated option spreads or pre-built with automated risk and profit management controls. We'll do this with strategies for any market direction, bullish, bearish, and perhaps even non-directional. You'll see that as well. And we have the most unique trade alerts you've ever seen. These are one-touch trade alerts, and I'll explain how that works in just a moment. Remember, everyone, we're speculating, and whenever we speculate, we accept risk. We're trying to profit, but with profit, there is always risk. So do take a moment and look at that risk disclosure. It is important. Remember that past performance is never a guarantee of future results, and that all funds used for trading should be risk capital. Okay. We are Altivest, and since 1997, we have been a registered introducing brokerage firm. We have over 25 years of experience, and we've traded tens and tens of millions of contracts. So we think we have a good idea of what we're doing, and we're of course in a highly regulated industry as a futures and options brokerage firm, and we're audited at least yearly, so that's to your advantage. We're registered with the CFTC and a member of the NFA, and we're located in California. Maybe you've seen some of our presentations in the past. And just a brief introduction, I am Eric Gebhardt. I've been doing this about 30 years now. I started back in 1991 with my Series 3 registration for futures and options trading. I graduated from the University of Southern California. I have my BS in Business Administration, and I'm a co-founder of Altivest. I began in the mutual funds and annuities and insurance industry, had my securities 6 and 63 licenses. I currently have my Series 3 as well as my Series 65. They call that the Investment Advisor Law License. All right, with that said, let me close the webcam for the moment. You have more room on your screen that way. And I have more room on the screen as well. Otherwise, I have a lot of windows to look through as I'm giving the presentation. But I want to point out what we don't do. So typically, people are looking to try to, sell these downtrends and buy the uptrends and pick stocks and securities and so forth and try to trade all that chop or maybe just buy and hold on forever. But we do not do any of that. So we're going to show you what we think is a better approach, but I know there are always hurdles in our way, and from all the feedback we've had and all the decades of experience, we're going to give you these 3 barriers here that I think you can relate to. So feel free to jump in and let me know in the comments and Q&A in the chat, I guess is what they call it here, the chat, that which one you think you can relate to the most. First of all, there's too much noise. How about social media? Wall Street Journal says here, you can stay popular on social media, but you can never criticize a meme stock. And CNBC points out social media is the most popular source of investment ideas for young investors. So if you're looking for investment advice and trading advice on social media, and you're, I guess, more of a novice, you're probably going to be looking at people like this, but it's probably not a smart idea. There's probably a lot of people out there like this making postings and stuff on social media, and let's stay away from all that. And the reason why is Bloomberg points out that the day trader army has lost all the money it made in the meme stock era during the pandemic lockdown. So you have examples like this. Here's this gentleman here. It said his parents gave him $500,000 to invest in the stock market, and he's got a screenshot of his account here, down 96%. So let's avoid that like the plague. Okay, folks. Now I'm going to pick on Jim Cramer or someone like Cathie Wood. That's because they're well known and they get paid a lot of money. So let's take a look. Should we listen to them and all the chatter on the business channels and so forth? Here, March 25 of this year, Jim Cramer says the bear market's over. Right here on this red arrow is where he called the bear market over. And of course, that was almost just about when it really started to heat up and get started. So I'm not sure you could make a worse call than that. September 11, he says here, I still believe we've seen the lows of this tough market. That was on September 11, right here at this red arrow. And of course, we're now, this is updated not, well, from yesterday. So we're at a fresh yearly low today. So that didn't work. And then he predicted FedEx will have a great year. Right here is where he made that call, that red arrow. And then of course it subsequently dropped 50%. And even the CEO says that they expect to have a bad year and a worldwide recession. So a lot of the calls here, I'm just going to pick on Cramer, but you know, buy here, buy here, buy here, buy. Basically, these guys can be so bad that what happened is someone started an ETF that's inverse. So the inverse Jim Cramer ETF, and that's not a joke. Someone actually started that just this month. Cathie Wood says the bottom occurred on January 27, right here on this red arrow. Well, no, clearly that didn't pan out. And she's down 41% since April 12. So a lot of work to do there, but maybe we shouldn't just listen to what people are saying on TV and radio. That's really called storytelling, narrative, trading. That's really not a place where you want to be if you're going to do this as a professional. Okay, the next hurdle. What about not enough time? You've got other things to do, not enough time in your day to sit in front of a screen and trade. So here's an example here. Kind of looks like our office there with the multiple monitors, but you know, your time is limited, our time is limited. You know, here's an example I just found of some people online. This person says, I trade full time. I sit in front of my computer. The market opens until the market closes, watching every once in a while after market hours. So that's a full-time job. Here's another person, about 10 to 12 hours of my day is consumed with trading. But I think a lot of us would rather be doing things like this, or maybe something outdoors, such as this or this. And of course, I think this one here could be really maybe my favorite of all, depending on, I guess, if you had a really, really busy day, right? So that's what we're going to try to solve today. And then even if you are trading and screen watching and hovering over your monitors all day, are you even beating the market? So day trading, is there a less than 1% success rate? Well, according to some studies, yes. Here is a study from Charles Schwab. They analyzed their active trading accounts over a 6-year period of time. The active traders substantially underperformed a simple low-cost indexed fund. Here's another study out of Taiwan. Over a 15-year period, less than 1% of the day traders were able to consistently beat the market. And then even out of Brazil, only 3% of the day traders made money, but less than 1% made more than the minimum wage. So it turns out that maybe even randomness is better than a lot of day traders. They do this hypothetical backtesting here with 100 of these, what they call monkey portfolios. And it turns out these random portfolios outperform the benchmark index by an average of 1.7% per year. So very interesting, folks. Here is your winner, your your fund manager right there. Okay, so here the third hurdle, the barrier here. You don't have the professional guidance or tools that you really need to get over and control a lot of your emotions when trading. So let's keep a close eye on controlling our emotions. Absolutely. Ed Sequoia from Market Wizards here. Great book, by the way. Markets are always correct and we aren't. Can be expensive trying to convince the markets that you are right. So you don't want to carry this with you into your grave. This attitude here will cause you to go broke in a hurry. And you know, we've all been on this roller coaster of emotions. You've got optimism as you start trading, and you get euphoric as you're winning, and maybe you capitulate and become despondent and surrender as you lose, and then you start that whole cycle again. So we want to jump off of that roller coaster. Even Motley Fool says the worst enemy for financial enemy is us, ourselves. And we have these common biases: confirmation, anchoring, and recency. And this one image here, I think, summarizes all those quite well. When things are going great, we're all a genius. So I think we can all relate to that. Now remember, algorithms and machines and computers have no emotion, no bias, and they're dominating the landscape. 90% of US equity trading volume is algo trading. That's according to JP Morgan, and I think they're probably right. So your competition isn't necessarily the other man or woman at their home office trading and day trading. It's a robot, it's a computer. This is not your competition necessarily. This is what it used to look like on the trading floor. And yeah, that's a grainy video I took years ago, but this is your competition now. No emotion, automation, built-in controls. So let's look at how, let's jump into the options here, and we're going to look at how insurance companies approach their business, and how can we trade options maybe like an insurance company might. Well, of course, they get paid a premium to assume risk, and they're selling and managing time. They're insuring themselves by hedging, and they're consistent and they're patient in their process, and they look at probabilities and favorable long-term odds and statistics and actuarials. They're just crunching numbers. That's what the insurance company does. And they're collecting your premiums. They make lots of base hits, and they basically do that and assume that risk. And we can do that with options. We can collect premiums by going short options. We need to be consistent and patient, and we need to manage that risk as well. That's obvious, and we're going to show you how to do that. And then manage reward. Don't get too greedy, just as important. And of course, you need the proper tools to make this happen. Lots of base hits. That's what we're after. We're not swinging for the fences. So we have short option strategies to collect premium. These can be non-directional, meaning the market can go back and forth, kind of chopping around, or bullish or bearish. And then we're going to look at outcomes with predetermined risk. These are called credit spreads, insured positions, predetermined risk and reward. And they can be non-directional, as we mentioned. And we're going to do this with stock index futures options. These are not individual stock options. And three benefits, and we'll get into that a little bit more. But first of all, an index is always less volatile. And you can have strategies for any market direction with an index, and it's not necessarily as easy to do with an individual stock. Part of the reason is volume, but we'll get into that. And then if you're trading an index, you're really just looking at one market. You don't have to track 6,000 or 7,000 different markets and try to filter out which one you're going to trade. And then another advantage here when you're doing this with futures options, you have a wide margin of error with some of these strategies. And don't worry about this, I'll explain this in a minute. But these are credit spreads, and you just, in this example, you look for the market to stay within this wide range. And before we jump into the demo, I want to explain a couple quick things here about probabilities and the Greeks. There's delta, and that really is the number here that represents the option value, how much it changes with the change in the underlying asset. And it's also the approximate probability of expiring in the money. So that's what delta represents, so we're going to use it that way. For example, a 0.25 delta means there's a 25% chance of expiring in the money, but conversely, a 75% chance of expiring worthless. Remember, deltas are not static. They always move with price and time. And it is not the probability of a winning trade. So keep that in mind as well. And theta, or time decay. Remember, options are a wasting asset. They have limited lifespan. So theta is a representation of time. It's a negative number. It equals 1 day of time decay. So if an option premium is 10 points and theta is negative 0.05, then the next day the premium is 9.95, and after that it's 9.90, and it drops and drops and drops, and that's simply because time is ticking away. So that's what it looks like on a graph. You can see as you approach time 0, the percent of the premium remaining drops and drops and drops. You're simply just, the clock is running out of time. Now, if you're only buying stock options, remember you have theta working against you. So here's a woman here on CNBC, and she says the appeal for a lot of retail investors to buy options is that they're much cheaper, but your potential for profit is actually not that high. So you want to trade spreads or sell options like professionals do. So that's what we're going to show you how to do. And she says an option spread calls for buying and selling different contracts. It's a very common way for investors to hedge risk and volatility. It's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. Now look at this here. In 2021, 11% of Robinhood's active users made an options trade, and of that, fewer than 1% actually made a multi-leg options trade. So let's look at professional multi-leg option strategies. Here's an example of a call spread that you sell, basically a credit spread with calls. You sell here this red line, collect premium. In this case, you take 4.5 points and put it in your pocket. And at the same time, you buy this blue line, the 45.70 call, but you pay out 2.25 points. But the net result here is you collect 2.25 points, $112.50 in this example, of course, minus any commissions and fees. So that's selling a call spread, and you just look for the market to stay essentially below this threshold here in so many words, but I'll show you an example. Selling a put spread, same type of thing. You sell a put, you collect 3 points. You buy a put, you collect, you pay a point, and the net result here is you have a premium of $100 that you've collected. Remember, these are not naked options. All these positions are insured. Maximum risk is capped. These are called covered option spreads. No naked trading allowed with us, that's for sure. You don't want to do that. And here's a couple big benefits. No margin calls, and there's no unlimited risk. So that's why you want to do only covered spreads. But this kind of summarized it here. This woman says, who is margin and why does she keep calling you? So you do not want margins calling you, that's for sure, or margin calling you. All right. An iron condor is simply a combination of the put and the call spread that we just saw. Here's what it looks like on a graph. You sell this out of the money call spread and out of the money put spread, and you look for the market to stay in this range here between the calls and the puts. And then here is our own proprietary short option strategy. It's a bit unique for sure. We came up with this name years ago and this whole strategy. We're going to show you that. It's called a Dragonfly, and it has 6 legs. Let's take a look here. It's a variation on a Condor. And there we go. You sell 4 of these calls. You buy 3 further out of the money calls. And then 1 closer to the money call. In the same structure with the puts, you sell 4 puts. You buy 3 further out of the money puts, and then 1 closer to the money put. And you'll notice that in the case of the call that you buy here and the put that you buy here, in this example, these puts and calls are actually 50 points closer to the money compared to the 4 that you sold here and here, and that creates a completely different trade structure, and we're going to show you that in the demo. And we have a few unique bearish option strategies, or bullish too, but we're looking at some of these bearish strategies right here. You can sell just half of the Dragonfly spread, and that's what that looks like. So instead of the puts and the calls, you can do just the call side of a Dragonfly. And there's something we call a bear hedge. It's probably better just to show you. It's simply put, you sell an out of the money call spread and you collect that money. And with that money, you buy an out of the money put spread. And I'll show you that here. So, but here's the thing, how do you actually create these spreads? How do you know which markets to buy and sell? Which strategy to apply, at what price, what's your entry timing? How do you manage the risk and the profits and so forth? So those are all good questions. And the answer is Theta Trader. So we're going to jump into that demo right now. These are pre-built option spreads. Our algorithm curates these Theta trades every day. Automation, bull bear, flat markets. We have the automated risk and profit tracking with what we call the risk thermal indicator, the RTI. Simple, effective option spreads and risk and profit management. So I'm going to jump into the demo here. We're going to switch screens. All right, you are now looking at the dashboard for Theta Trader. And maybe I can magnify that just a little bit. This is a demo account I use for webinars. So you'll notice this section here are the Theta Trades. Here are your open short positions right on the dashboard and your open bought positions. You can see your account info. And this is all integrated with your AltaVest trading account. So Theta Trader is a tool that we built for our clients. So you use it with your AltaVest trading account. And then here are your current price quotes on the indexes and a few other markets. So we'll start here at the top. There are bullish strategies that are pre-populated and bearish, and of course non-directional. And the markets we're looking at are the E-mini, S&P 500, NASDAQ 100, and Russell 2000. And we'll show you why in just a minute. Now, we looked at Condors and Dragonflies, so here we go. These are the Theta trades for today. The algorithm has already pre-built these trades for you. It's selected the expirations here and the strike prices. So anywhere from 16 to 65 days till expiration. And you'll notice here, this is your maximum potential profit at expiration. And then this is something called the targeted annualized return at expiration. Now this number here is simply to compare one trade to another. So you cannot expect to generate 271% return just by placing that trade. That's not what that means. And also point out that we always recommend getting out of a trade before expiration. We don't hold things till expiration, and I'll show you that in just a second. But let's go ahead and click on this one here. This is the December trade, 65 days till expiration. So we're going to drill down on this. First thing I like to do here is look at a graph so you can see the calls and the puts on this particular trade and where we're trading at now. Gives you sort of an overhead view, but notice the wide very wide spread between the calls and the puts that are being sold. The 29.50 puts and the 41.90 calls. So that's a wide berth for sure. Now, this is an expiration date of December 16. The premium being collected here, your put risk, call risk, commissions, your capital, your cash required, and here's your profit potential at expiration. This is called your targeted return on cash and the targeted annualized return. Now point out here that the algorithm has already pre-selected these strike prices for us. You could change them if you wanted, but sort of defeats the purpose of the algo doing the work for us. Now let's point out one thing here. The put option, the 29.50 strike, has a delta of 9.76. So that suggests an over 90% probability that this put would expire out of the money. And here's a call, the 41.90 call. The delta is 6.85. So that suggests an over 93% probability that this option expires out of the money. So that's why the algorithm is choosing these particular strikes. The math, it's computed, the math that is on your side, so to speak. And you'll notice here it pre-selects a quantity of 1, that's the default, and always a sell because you're selling the Condor, collecting the premium. So you could change it. And let me point out one thing here. I'll go back to the quantity of 1. Cash required is about $900, profit potential a little over 100. And if you just simply add that, make a quantity of 4, for example, you see everything goes up by a factor of 4, or go up to 5, same kind of thing. So we'll go ahead and do 3 of these. We'll leave the value there at 2.5, and we'll go ahead and place that order. There it is. Just assumes you're filled right here, those condors. Now let me go back here and point out the Dragonfly, and then I'm going to show you a really great feature that you won't find anywhere else. At least I've never seen it anywhere else. So here's a Dragonfly. We'll look at the December expiration, just like we did with the Condor. I should also point out that all of the percentages and dollar figures are net of all commissions and all trading fees, so keep that in mind. But here is the Dragonfly. Here's what it looks like. The calls and the puts, 6 different legs. Now, if you were trying to build this on your own, it would be very, very difficult. It'd be a nightmare to try to select the different strikes and the values. But that's why the computer has done it for us. You see your cash required is higher than a Condor, $4,559. Profit potential is higher, $441. And that's simply because you're selling quantities of 4. You always sell in increments of 4 calls and 4 puts. If you wanted to do 2 Dragonflies, it'd be 8 calls and 8 puts, and so forth. You'll see the T-Rock and the TAR numbers are a little bit lower than a Condor, and that's simply because, remember, you pay money to buy this extra call and put. So that's like paying money for additional insurance, and that creates a totally different paradigm, or I guess you could say risk-reward profile. And you'll notice the put being sold has a delta of 9.76 and the call being sold of 6.85. So again, probabilities that these expire out of the money are greater than 93%. Defaults here to a sell because you're selling the spread, collecting the premium. Maybe we'll do 2 of these. Cash required just about $9,100, and we'll go ahead and place that order. And there we go. Now here is a really great feature. You can find it under the trade simulator. And I've loaded some of these to save some time. We can go backwards in time and we can test out any strategy. So here is a Condor. We'll go ahead and play that for you. Just a second, I'm not sure why. Okay, so you can see the trade is moving along nicely and kind of backtesting that Condor. Now, let me do something real quickly here. I'm not sure why that's not showing up. Maybe it's because I've end of month April. Just a second, folks. Let me refresh that. Just a second. 3-1. There it goes. Let me do this real quickly. For some reason, the bottom portion of the chart wasn't displaying. There we go. So we'll just scroll to the end, save some time. So you can see here, as you go day by day, you go day by day here, and you can see down below how the trade's working out, and you'll see it turns blue. And I'll explain these colors in a second, but blue means to take profits. The trade is now profitable enough. The algo says take profits and get out, and you can automate this. So whenever it turns blue, the orders are automatically placed for you. So that's one thing I'm going to show you how to do in just a second, but that's what we mean by automation. And that's the Condor, end of month April. So how about the end of month Dragonfly? We'll just jump to the edge there, to the end. And you can see that one turned profitable on March 21st. That was your first profit-taking opportunity. But compare that to the Condor on April 1st. So again, the difference between the Condor and the Dragonfly, you can see the Dragon here has that additional put and call that you own, and that changes the structure of the trade, and it allows you to sometimes get out of a trade much earlier compared to a Condor. So both of these trades worked out just fine. Here's another example of a Condor. Kind of forget how these all play out, but you can see green means good, do nothing with the risk thermal indicator. It turns yellow, elevated risk, and that makes sense because it's moving higher and higher to those short strikes up there. Then it drops, you get elevated risk as orange. The trade is now losing money. Bouncing around pretty good. And then it turns red. So too much risk, take your loss and move on. And I want to point out that whenever it turns red, you can also automate that. So you don't have to monitor and babysit. Your orders to place the order to exit will be automatically placed for you. And we'll look at a Dragonfly here and compare that to the Condor we just saw. Look at that, it actually turned blue and gave you a profit-taking signal. So instead of hanging on to the Condor and ended up taking a loss, had you done a Dragonfly on that same day, that same trade, you had an opportunity here to take profits, and that could have been automated. And that's the March 2020 expiration, same trade. I'm seeing same date, I guess I should say, same expiration. So the Condor and the Dragonfly can behave differently. That's why the Condor, I guess you could say, is a little more aggressive. Here's another one. This is the bear hedge. So again, you sell this out of the money spread, collect the money, and then buy this out of the money put spread. And don't pay attention to the colors on this one. But we'll just, I mean, of course you can see it's profitable, so you could close that out at any time. Or in this case, since just an example, assume you hold on to it here. This one would end up kind of at a max profit because it's below your put spread. So that's something you might want to do with a bear hedge, and I'll show you how to place those orders in just a second. Or the half Dragonfly calls. Remember, we looked at that briefly. So there you go. Have a profit-taking order here, and that can be automated, and I'll show you how to do that. Here's another Condor trade. So trades actually losing money at the moment, but still the RTI says don't do anything. Finally, you take a loss on it. Too much risk and get out. Now let's compare that to a Dragonfly. If you did a Dragonfly in that same day for the same expiration. Look at that. The Dragonfly actually turned profitable with 29 days remaining till expiration. So again, the Dragonfly can be much more robust at times. Doesn't mean it's always going to win, of course not. But compared to the Condor, there are many times where the Dragonfly will allow you to get out either earlier or will allow you to get out with a win, and the Condor won't. But you have to give up a little bit of profit potential for that. So that's just kind of how it works with trading. And here, right here, is how you do the, just click on that. The automation settings right here, you activate your risk manager here and your profit directive. You check that box there, and then save your settings, and that's all you have to do. So that's simple as that, to automate the profits and risk targets. Also want to point out that we have daily research available, something called TradeScope. We do that, of course, every day with our clients. And then we have this daily narrative here. People love this as well. Really short and sweet and concise. You can see what's happening in Europe and Asia and the US, what to look for, economic data on the calendar, and so forth. And any trades that might have been filled. So that's all available for all of our clients right here. And then we also have a great help section, and these are all videos. So if you need a little bit of refresher on options trading, it's all available here, or even a little bit of a walkthrough on Theta Trader. But you saw how simple it is. You probably don't even need it, but here's a brief description of the color coding. I mentioned I would get to that. So here's the risk thermal indicator and how it works. So we don't need to get into all of the details here. Of course, our time is limited. And then if you want to go backwards, back to the dashboard, let me point out real quickly the different strategies here, like the bear hedge that we looked at. And you can often do those for a credit or even money, so it doesn't cost you anything. So you just click on bearish, and then you go say to bear hedge, and we'll just do, I don't know, November, end of month, just kind of randomly picking one. And you'll see a chart if you want to. You can look at the current price here. You're selling this out of the money call spread. You take that money that you received and you buy an out of the money put spread. So you can see here, these are the put strikes that were chosen for you and the call strikes that were chosen for you. And you could do a quantity of just 1 or 2 or 3 or whatever you wanted, and place the order, just like that. Then you can go back here and take a look at the dashboard again. And then of course, maybe you're bullish. You could do any number of these strategies here as well. You can simply just buy outright call spreads or buy outright calls. You can do butterfly strategies. We do that occasionally, but and of course, these, I've been looking at the E-mini S&P 500 mostly, but we do NASDAQ 100 and Russell 2000 as well on occasion. And this is your trade history. You can go backwards in time. Up here under positions, your open positions, closed positions, whatever it is. You can always see on your dashboard though your open positions. So here's closed positions here. Real easy to take a look at any of these. So if you wanted to kind of drill down and go backwards in time and review a particular trade, I just clicked on this one here. It's highlighted in gray, and you can see you scroll down here. And this one worked out pretty quickly, August 30 to September 6, and then it was closed out. All right, so that is a brief overview of the Theta Trader and the dashboard and how simple and user friendly it is. That's by design. After trading with thousands of clients and millions of option spreads, we got all that feedback and put it into Theta Trader. But I'm going to show you what I think is probably the very, very best feature of all. But I do have to switch screens, so bear with me 1 second, folks. And I do see a lot of questions and comments coming in. I'm not ignoring you. I just want to make sure I get through all this before we jump into that. Okay. Is there some way we can make this easier? Yes, our trade alert functionality. I want to make sure you are all viewing my screen. Yep, you are. Okay. So these are literally one-touch responsive alerts. You simply touch accept or reject, and that's all you have to do. Our technology handles the rest from there. And these alerts are live, meaning they're integrated with your AltaVest account. So all you have to do is touch accept and the order is placed. If you don't like the alert, you just touch reject. Here's an example. You'll receive a text message and you'll just touch the link. You can also receive these via email. So you'll see you'll get a brief description, you'll get a graph of the trade. That's a Condor. I want to point out, gives you the net premium being collected, the cash required for the trade. You'll notice here the quantity is already pre-selected for you, so they're pre-sized for you and your account. Each alert you receive is specific and unique and tailored for you and your account. And go ahead and press the rest there. 71 days till expiration, targeted annualized return, and then the price there. If you like what you see on that alert, you just touch accept on your screen. That's all you have to do. Just that simple. So if you want to look at that one more time. Yeah, this is just, you can see the date on that, 2019, a little bit older, but it all works the same. Just that simple. Now, the question we get is what kind of results do you get with the trade alerts? Well, the only way we can really do that, of course, we're a brokerage firm, so we don't manage people's money. Everybody gets different results because everyone's doing something differently. Again, we are not managing your money for you. We're a brokerage firm, and this is a trading tool that we've developed. So instead of a broker sitting at their desk calling you and say, I've got a recommendation, we use these trade alerts. And of course, also everyone uses the Theta Trader platform differently. Some people place different trades at different days at different prices. So the performance of people using Theta Trader is, of course, everyone is unique. But with that said, I can at least show you the history, give you a brief overview of the history of the alerts. So take a look at that real quickly. Okay, so here's an example. Back starting in July of last year, you can see the trade alerts, because this might answer some of the questions too. People might say, well, how many trade alerts will I get every week or every day or whatever? So I think this will in part answer that. So you can see the green are the winning trades. The yellow is not a win or a loss. Just and then this one here, the L, loser. But you can see lots and lots of winners, a few losers there and there every now and then, and those are mostly when you buy options. And that makes sense. Remember, we saw that woman at CNBC talking about that, and I talked about it briefly as well. It's just not a high probability event. However, we still do that on occasion. And then you can see the yellow, those are trades that were rolled. So the first trade was then rolled and ended up being a winner. Nice string here. Same thing with another roll. And don't do rolls often, but there were a few earlier this year, but turned out to work out well anyway. And there you have it. So I would say, you know, you've got maybe 1 or 2 alerts a week on average. So this is not day trading. It's not high velocity, high volume type of trading. All right. So hopefully that answers the question. And now here's how to get started with Theta Trader. We have memberships that we make available to give you access to our Theta Trader software, as well as us as your personal coaches. So remember, with Theta Trader, you have the Theta Trades, the Risk Thermal Indicator, and the Trade Simulator. That's all valued at $3,588, all of that software together. But you just saw the trade alerts, and that's all part of the Theta Trader membership. So those alerts, remember, are all going to be unique for you and your account. You're not going to receive alerts that basically, what should I say, is copy the same trade you already have in your account, for example, and the size will be already correct for your account balance. So you have that trade alert, the most unique alert service you've ever seen, valued at over $4,400. So you have the Theta Trader software, and that includes the alerts, valued at over $8,000. But you also have us to talk to. We are your private caddies, so to speak, your coach. That is included with your Theta Trader membership, a co-pilot, someone to work alongside you, discuss your trades, your history, what you want to do. That value there is worth tens and tens of thousands of dollars to have people with decades of experience at your side. So you have the Theta Trader membership that includes the software, the alerts, and your private coach, over a $15,500 value. And just so we don't forget, there's always that extra bonus. I just don't want you to forget about that proprietary research valued at over $2,900. People love that. Our clients love that daily research. It's a real quick dose. You don't have to spend hours trying to read a bunch of gobbledygook and, you know, wonky Wall Street speak. So, and then also those online tutorials. Those can be helpful as well. That's just part of the Theta Trader platform. So you have your Theta Trader membership includes the alerts, the software, the coaching, the research, $18,500 value. We used to do these events in person. For $4,000, we'd sell memberships and have people at the back of the room signing up the paperwork, and that was that. Then we did this for a bit at this value here, this price here, $29.97. But because these are live events, and we like to reward people for showing up to a live event, and that's true, that's why we do this, we can even do much, much better. Not $7.97, but 80% off our retail price. And this is for a lifetime membership. It's one payment of $5.97. So lifetime membership, one payment, $5.97. Here's the link, cf.altivest.com/TT. And that's my phone number. If you need to call, you can. It might go to voicemail, might forward to someone right now, but that's my number. But quite frankly, you simply just go to that link and you sign up and we'll get you started. And there's a 30-day guarantee. So if after 29 days you decide for whatever reason it's not for you, we're not going to twist your arm, and we'll just refund that $5.97, the full amount, back to your card. Just that simple, folks. Now, some FAQs. Do you want to lower your tax rate? What about tax efficiency? Something people do not spend enough time with, or attention to, give that attention to. But if you're trading individual stocks and day trading, you are not tax efficient. In this example, you'd have a $7,400 tax liability if you're trading individual stocks. But if you're trading with us, in that same example, your tax liability is $5,360, so a tax savings of over $2,000 simply because of the tax efficiency in our space. And that's because your gains, it's got the 60-40 tax treatment where 60% of the gains are taxed at the favorable long-term capital gains rate. So that is the big difference. That makes a huge difference in the long run. And there's no more itemizing with us as well. Always consult your tax attorney or advisor. And IRAs, yes, contact us if you want to do an IRA. We can do that. Benefits to doing IRAs with these self-directed IRAs, absolutely. And why the E-minis? Well, they're liquid, they're efficient, they're cost-effective, and the E-mini S&P 500, for example, is 2.5 times larger than all ETFs around the world. The average daily dollar volume, 2.5 times larger, and then almost 10 times larger than the SPY. So this is where the volume is, folks. If you didn't know it, this is where you want to be. 5 additional advantages for the E-minis: volume, liquidity, access, superior execution. ES options offer a cost savings of $4 to $15 per contract compared to SPX. So that means you get those tight bid offer spreads. And they have a large market share, densely packed strikes, 100 annual expirations. You get the granularity and the coverage you need. So that means if the algorithm wants to place a trade at a particular strike price with the E-minis, it's going to find what it needs. And therefore, you can keep your strike prices laddered, basically, is really what we're trying to say. And if you're trying to do a Dragonfly with stocks, you can't. You just can't do it. So with us, the E-minis and the way we trade them with the Dragonfly, the 6 different legs, it's placed as one order at one price. You don't leg in. If you do that with stocks, you have to break it up into 2 separate orders, 2 separate spreads to enter, and 2 separate spreads to exit, and it's just a nightmare. So huge advantage on execution. Now remember, retail stock options traders. I'm talking about stock options traders here. Retail investors only have access to the most basic call and put options. They don't have access to option spreads or more sophisticated strategies. Well, as you just saw with us and Theta Trader, you do. We give you that access to these professional and sophisticated multi-leg option strategies. Another advantage, you can track just 1 or 2 markets with us and Theta Trader. You don't have to follow 6,000 different stocks. Margin is efficient. It's a clear cost structure. Remember, these are futures options. They trade at the Chicago Mercantile Exchange on the Globex platform. That's an electronic platform. That means every order you place compared to the billionaire, every order is treated equally. That's not the way it works with stocks, folks. They have payment for order flow where you place an order and your order gets sold to someone else for execution. And all this nonsense about free trading with stock options, that's baloney, folks. There's no free trading. There are hidden costs. She says most popular trading apps generate a lot of revenue from payment for order flow. They can make more money from options than regular stocks. So there is an incentive for them to lure investors. Absolutely, she's right. Robinhood says they're commission free, but orders are executed at prices inferior to other brokers. They get fined. The people try to save a penny, but they end up losing a nickel. David Einhorn says if you want the broker to work for you, pay a commission. Nothing of value is truly ever free, and that's, I think, very, very true. So no payment for order flow nonsense when trading with AltaVest. Our commission rates are competitive. Our E-mini rates are 5 1/4. That's round turn, all in. Here's a copy from another big box brokerage firm, and they said their rates are 2 1/4, but that's per side. And then they add more clearing and exchange fees on top of that. So the total ends up being higher than what we charge. So our rates are competitive. We talked about performance. Everyone's different. Again, all calculations are net of trading cost. What size of account? We suggest a minimum $25,000 account. And if you want a free membership, absolutely, we'll rebate that membership 100% if you have a $100,000 account or more. $50,000 account or higher, you get 50% rebate. So people love taking us up on that offer, and that's just fine with us. Yes, IRA, individual, joint, corporate, LLC, trust accounts, all the above. So again, why do you want Theta Trader and what we call non-correlated alternatives? Well, it may improve diversification in your portfolio and lower portfolio risk. And then what is the risk out there right now? Well, there's a bunch of landmines out there, but how about inflation? So here's the value of the dollar, consumer dollar, down in just 22 years. Now about 60 cents compared to a dollar 22 years ago. How about your average hourly earnings? Plummeting, and that's obviously in large part because of inflation. So you might make a little more money, but inflation's so hot that doesn't matter. So that's what's called here the inflation shark. This guy here thinks his head is still above water. Hotter than expected producer price inflation, food costs jumping. That's from yesterday. Today's CPI surges to 40-year highs. Inflation, that's what we're all talking about. You have the Fed printing money, even though they said it was a transitory inflation. $29 lost. $29 million, I'm sorry, $1 trillion lost, the combined market value of the bond index and the world index. So just crazy to think about that. Consumers are struggling with higher staples cost, CPI components up 22% year over year. Well, how about a recession? You've got inflation and now you've got a recession. The 2- and 10-year yield curve is inverted. Look at this. So that is, things are breaking, folks. Q3 GDP forecast getting cut all the time. The Fed is hiking rates while GDP contracts. That's never been done before. If GDP is contracting, the Fed historically will lower rates, make money easier, but they're doing the opposite now because they're stuck with inflation so high. Americans continue to pay for inflation with their credit cards, record low savings, record high credit card, interest on credit card debt hit a record high, 18.7%. Credit card debt soaring. Anyway, I'm going to sound like doom and gloom here. Maxed out credit cards. JP Morgan, Jamie Dimon says U.S. is likely going to tip into recession next 6 to 9 months. I don't know, I think we're probably already there. Personal savings rate is plunging. Existing home sales shrinking. Look at the mortgage year. Look at the rate of change on that mortgage rate. I think we're now above 7 point something. Yeah, 30 years, 7.14, 20-year high. This is demand for mortgages collapsing. Mortgage payments increasing more than double just from 2 years ago. Median price of the single-family home dropping almost 12%. Goldman Sachs says the housing market's going to turn down 2023. On and on and on. So I've got too much doom and gloom here. Sorry about that, folks, but I did want to point out this. Keep in mind, guys like Druckenmiller, you need to pay attention to him. Why? Because he's actually managed money and he's unbelievably successful. But he says we're headed to recession. The Chicago Fed president here, Evans, says they're going to continue hiking. So you want something that's going to be able to maneuver in all these different market conditions. You don't want to just be passively long. You don't want to try to just sit it and wait it out all the time. You want to try to sidestep those bear markets. So look at this. It took 6 years after the tech crash and 5 years after the financial crisis to regain prior highs. So these are these red lines here and here. So you can be sitting for a long time. And look at this. Sometimes there's 20, 25 years of time, where the market might go just sideways. And look at these big drawdowns here. 89% the Great Depression. That's pretty crazy. And it would take you, it took several decades to recover. So you do not want to sit idly by and just hope the market's going to turn around. I mean, yeah, last pullbacks we've had, or corrections, or even big sell-offs, the market's recovered fairly quickly, but that doesn't have to be the case. Paul Tudor Jones, another big trader, says we're already in the middle of a recession. So legendary Druckenmiller, and why should we pay attention to him? Look at this. So he started in 1981 with his hedge fund. He delivered an annual average return of 30% from 86 to 2010. Average annual return of 30%. And you know what? I think he barely had any drawdowns. So that's amazing. So meanwhile, Yellen says the financial markets are operating normally. And then the very next day, she says, I'm concerned about the loss of adequate liquidity in Treasury. So don't listen to these officials, folks. That's my advice. If you want to, that's fine, but they really don't know anything. So avoid drawdowns. And I think Theta Trader can be a part of that, where if other traditional investments aren't performing well, Theta Trader and the strategies available have a chance to actually perform better. That's for sure. So keep in mind, if you're down 50%, you need 100% return just to get back to where you were. So far this year, it's the worst in history for that 60-40 portfolio that presumably diversified everybody. Year-to-date loss through September was down 20%. I think you're down more like 25 or 6% now. And look at this analogy here to 2008. Of course, past performance doesn't guarantee future results, but you can see the blue line is from 2008, and here we are, the black line, week by week here. So, gosh, I don't know. It sure looks like it's rhyming with the past. That's for sure. So you don't want to be all in stocks or just that traditional 60-40 and think you're okay. You should probably have something in alternatives. That's what we do, and that's why we like Theta Trader. Remember, any market condition, pre-selected spreads, automated trade exits with that RTI, those one-touch trade alerts. You get the personal coaching available. That's really invaluable. 5 easy steps here. You just complete that order form here at that link. You'll get your Theta Trader login credentials. You'll get an email with your link to open your account electronically. And then once the account is open with your number, you just fund the account and begin trading. Okay, so, and that does expire, I believe that discount expires tomorrow night. Yeah, so you have some time to think about it. If you have any comments or questions, but let's see if I have some other questions I didn't answer. I do see a lot of comments and questions in here. Okay, so yeah, people are asking about, they might have missed a little bit. There's going to be, yeah, there is a recording. Yes, and that should be later today. Let's see here. Someone asked about taking profits prior to expiration. Yeah, so if you set up the automated trade exits on Theta Trader, you will always be out before expiration, whether it's for a win or a loss. And unfortunately, we cannot accept accounts out of Canada. Sorry about that. I see someone here, Saudi Arabia. Yes, I believe we have just spoke to someone via email from Saudi Arabia. So give us give me an email, shoot me an email, or give me a call if you want to talk more about that. But yes, that's not a problem. And if you have a question about where you're located or what country you're in, let me know. And specifically, because I don't know off the top of my head, I see a lot of different, let's see, which platform? Well, Theta Trader is the platform. That's correct. We are the brokerage firm. So yeah, sorry if I didn't make that clear. We've been doing this since 1997. AltaVesta is a brokerage firm, futures and options. And Theta Trader is our options trading solution that we developed for our clients to trade with us. So yes, and you cannot do a Dragonfly with other brokerage firms the way we do it, because everything is done, as you saw, pre-built and then placed as one order, as one object. at one price. You can't do this with stocks. Just doesn't work. Yeah, thanks about the question about the RTI. And this does not work with micros. It works with the minis, the E-minis, not the micros, but good question. And some of the risk reward examples. Yeah, no, that's true. I mean, these are the higher probability outcomes, because yeah, you might place $1,000 up as margin for a Condor, and your profit potential might be 100. So that seems sort of inverted against you, but it's the higher probability outcome because those deltas are so low. That's really going to allow for many winning trades over a period of time. And you saw the trade alert history, but certainly there will be some losers every now and then, and it is possible if you hang on to a losing trade that you end up giving a lot of gains back by hanging on to a loser. So yes, that can definitely happen, and that's why we've had to roll a few times too. So thanks for the question there. 25,000 is our suggested minimum. Each Dragonfly is about $5,000 in margin, and each Condor is about 1,000. So if that answers the question. Sure, you can place just credit spreads. That's what we've been doing most of the year, selling out of the money call spreads. We turned bearish in January in terms of what we've been recommending, and I guess you could say it's worked out very, very well this year. So we sold a lot of call spreads, done some bear hedges. I think we had a few Dragonflies in there as well. But yes, you can absolutely just use Theta Trader, trade with us, and simply just do credit spreads with us using Theta Trader. Absolutely. And the software will not tell you if the market conditions are bullish or bearish. No, that's you would use us for guidance on that if you'd like, or maybe you have your own research and analysis. We can trade futures contracts too. Yes, we're a full service futures and options brokerage firm, but Theta Trader is specific to these E-mini option spreads. We covered the cost already. Yeah, I see Richard's asking about commodity spreads. Absolutely. Plenty of people do futures contracts with us as well. The volume is always high. So, and people are asking, how does the software perform? Well, keep in mind, this is not a system. It's not necessarily a trading system. It's a platform that allows you as a self-directed trader to choose to select and place certain trades or not. But again, we're trading the E-minis, so that's the volume in the E-minis. There's really no markets that are deeper, or so really that's the whole advantage here. So there's really not, we're not in thin markets. And then you're asking for success. Well, you saw the trade alert history, so I showed you that. But remember, again, this is a platform where you as an individual self-directed trader can make your own trading decisions. But what we're doing is presenting you with a menu of algo-driven trades and possibilities. And then from that menu, you can then select what trades you'd like to place, and then you can determine when you want out of those trades. You can do that automatically with the blue and the red RTI like you saw, or maybe you want to just do it yourself and have your own way of getting out. Okay. And I'm getting some questions here about the link. Oh, it looks like we had a response there. Yeah, so it's I'll just type that in there, even though I think it's in there already. Yep, good questions, folks. All right, let me. And someone mentioned, well, here's a good question. Yeah, thanks, Richard. Saying terrific presentation. Let's see. Someone asked about performance when VIX is low. Well, again, the platform has available multitude of different strategies for different environments. So the market conditions the platform will adapt to. So we've been doing this for many years with the VIX much lower than it is now, and at that point you might want to do a lot of dragonflies, for example, if the VIX were a bit lower. So it just depends on the strategy. It's very, I guess you could say, adaptive. And someone mentions support system. Well, we are the support system. So yes, you have support available to you, but I don't really think you'll need it. I mean, we have a lot of self-directed traders using Theta Trader and responding to alerts, and there's really nothing to it. It's just that simple. Well, the RTI exit strategy, and whether it's for a profit or loss, it's based on an algorithm that will determine when the optimal time to get out would be. So that's basically part of the technology that does that for us. And yeah, lots of good questions. Well, again, someone's asking, how does this system protect or save an IRA from the losses related to anticipated recession? Well, keep in mind, this is not a system. A system implies that you just turn something on and walk away, and then everything happens automatically from that point forward. This is a software platform that makes something otherwise very complicated available for you to decide how you want to trade it. But it wouldn't matter what your account is, if it's an IRA or what have you. You can automate the RTI if you'd like to get out of positions when it turns either blue for a profit or red for a loss, whichever comes first, or you can simply not automate it and decide to close out trades at your discretion. That's fine. And anticipating recessions, well, that's kind of, like I mentioned, in January, our company turned basically bearish on the market. And so from that point forward, we've only been really focusing on bearish-related strategies. So, and you have a different outlook. Certainly you can place trades that differ from that. That's fine too. And I think the alerts are really going to give you an idea for what you might expect from us. And again, everyone doesn't take every alert, and everyone might place alerts at different, or accept alerts at different times of the day, or at different prices, or not at all. So everyone has different performance, and the alerts per week, I think you're probably going to, on average, expect 2, maybe 1 to 3 per week. It sounds about right. It depends on the environment. We might get into some trades during a week, and it might take the next week might be quiet because theta decay is working in our favor. There's really nothing new to place. Okay, does that help? I see Tucker asked questions, and Dadani and Tony and Abraham. Yeah, thanks everyone for those questions, and a bunch of others. Alwyn, Fred, Mr. Smart, it looks like here. Just a lot of great questions. John, Craig, someone called Trader. Just scrolling through. I think I'm getting to all the questions. All right, anything else, folks? Let's see here, another question. Oh yeah, well, someone's asking about software getting you out at less than max loss. Yeah, absolutely, that's what I mean. We're always out before expiration. So we're not sitting on trades and taking a max loss. That's for sure. And yeah, we do have a recording available. Absolutely. Let's see here. Yes, so just again, 30-day guarantee on your membership. So really, you don't have any risk in that. It's probably a good idea if this is something you're kind of leaning towards, but not 100% sure. You simply sign up, use the link cf.altivest.com/TT, and get familiar with us. We'll start the onboarding. You can get your login credentials. You can maybe take a tour on your own through Theta Trader a bit, but really it's that simple, what you saw in the presentation. All right, another question about the recording. Yeah, you can see the trade alert results. I covered that in the webinar, so someone's asking about that. Oh, someone said they joined us about 2 months ago. Thanks for that. It's always kind of fun to see people that are reviewing the webinar again. Yeah, don't worry about the, if you sign up with us and you start getting involved with, and you pay the membership, you start getting involved with Theta Trader and talking to us and whatnot, and something happened where you were delayed with getting your account open or whatever. I mean, we're not going to twist your arm and say, oh, it's been 30 days and 1 second. You can no longer have a rebate. That's not the way it works. So that's not really how we're doing this, and that's not really what we're in business for. We've been doing this for 25 years, so that's not how we operate. So don't worry about that. If it turns out that's really something you can't move forward with, that's fine. We're not going to hold you to some sort of calendar date and time down to the second. Oh, good. Another user says, I'm really impressed. I'm going to put in another 25K. So yeah, that's great to hear. All right. Yeah, thanks for the shout out, or the hat tip, as they say. Thanks for that, Ted. All right. Well, let me know if anyone wants to jump into the platform again. I can spend like 5 more minutes. Excuse me, I'm mumbling here. I could spend another 5 minutes or so if you want me to jump back in and look at another example on the platform. But I've been talking a while, so hopefully I'm not droning on and boring everyone to death. I see we still have a nice big crowd hanging around, but I'm going to have to get moving here. So with that said, again, you've got the link cf.altivest.com/TT, and that heavily discounted membership price expires tomorrow night. So you do have some time, but really, again, I've had people say, I wish I should have done this, and when are you going to do another one? And I don't know. We don't necessarily know exactly when we do these in the future. We don't have a specific schedule. It's kind of one of those things where we have a lot going on and a lot on our plate, so we can't always get to these live presentations as much as we'd like. But give us a call, 949-236-6961. Send me an email, info@altivest.com. That'll go to me, or Eric, E-R-I-K, @altivest.com. That's fine too. Someone wants the futures example. Well, remember, Theta Trader is not for futures contracts. It's only for futures options. So we don't have anything available specifically to automatically select trades for you with futures and manage them and this and that. That would be something you'd have to do. You could call us and say, I want to trade contracts of gold. I want to trade contracts of soybeans. You could work with us that way and place your orders through us that way, or we have another platform that works for futures contracts. If you want to place your own orders and trade futures, that's fine too. So we have people that do that. They want to trade futures contracts and they want to use Theta Trader. So that's fine too. You can do those both at the same time. All right, folks, I'm going to wrap it up. Thank you for all your attention Someone's mentioning something about, no, we don't allow any other, like Theta Trader is our platform that you use and trade through us with. So Altivest developed Theta Trader, and our futures trading platform is our own in-house platform as well. So we don't have basically third-party platforms. So we keep everything in-house. And yeah, thanks. You can wait for the recording, and we'll leave it at that, folks. Give me a ring or just sign up. I look forward to hearing from you. We've got a lot of people signing up, and people that have even signed up before and still watching and saying thank you, and they're adding more money. So I think that's good to hear. Good thumbs up from everyone. And we'll be in touch, and I'll hear from you soon. Thanks, everyone. Bye-bye.